Hello, welcome to News Center. With me, Parikshit Luthra. It was a volatile day of trade that saw the markets close at a month low, courtesy weak global cues. Nifty and Sensex fell over 1% with the market breadth firmly in favor of declines. The broader markets underperformed the benchmarks with Nifty Bank and Mid-Cap Index falling over 1.5%. While pharma and diagnostic stocks surged, reopening stocks slipped on COVID concerns. Manglam Malu is here with the details.
But it was a weak day of trade, but importantly, it was a weak, volatile day of trade. There was rise of fear, and it was rise of COVID fear as well. India VIX was the standout index that told you the story of the day. The Nifty meandered in a 300-point range, with the highs being just below that 18,500 mark and the lows being just above that 18,150 mark as well, which again is in the broad range of both the 50 and the 20-day moving averages of the Nifty. Talking about moving averages, the Nifty Bank, which had held on to the 20-day moving average, had now broken it in today's trading session and closed below that as well. The broader markets were telling you that there was weakness, weak internals, 5 stocks declined for each stock that advanced, and the mid-cap index underperformed both the Nifty as well as the Nifty Bank. The only index that stood its ground today was the Nifty Pharmaceutical Index, and a bunch of these diagnostic stocks that gained on fears of rising COVID cases in China. So just to name a few, we had Glenmark Pharma, Granules, Divi's and Cipla from the Pharma pack do extremely well. Diagnostic gainers for Metropolis, Dr. Lal and Thyrocare. But on the weaker side, we had all those unlocked stocks go back into, losing terrain. But these again are just fears. And as a result of which, we saw a bit of decline in Indian Hotels, Delta Corp, PVR, as well as Trent. It was a weak day. It was a weak, volatile day.
All right. Thank you very much, Manglam, for joining us. Moving on, RBI Governor Shaktikanta Das made yet another pitch for banning private cryptocurrencies, saying they originated to bypass and break the system and have no underlying value. Speaking at an event organized by Business Standard, Governor Das warned that private cryptocurrencies are allowed to thrive. It may cause the next financial crisis.
They have absolutely no underlying. And not only that, I am yet to hear any credible argument about what public good or what public purpose it serves. If it is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies. The current 17.5% is on a low base of previous 2 years. There is a base effect which is also playing its role here. So it's on a low base. And second point, it is reflective of the underlying fundamentals of the economy, and it is also a reflection of the pent-up demand of the pent-up demand for credit of the last 2 years.
All right, so this is a story that we'll continue tracking very closely. Remember, the government is also looking at how the cryptocurrency regulations really pan out across the world. All right, let's now focus on the government's production-linked incentive schemes. The Empowered Committee, headed by Niti Aayog CEO, has approved incentives worth 415 crore rupees for 2 companies under the PLI scheme for large-scale electronics manufacturing. The 2 companies are Foxconn India and Paget Electronics, which is a 100% subsidiary of Dixon Technologies. Through these incentives, the government is expecting additional production worth over 10 lakh crore rupees and generate employment for 7 lakh people. Electronics is not the only sector. The government has announced production-linked incentives for a slew of sectors, at least 14 of them. But a presentation by the Chief Economic Advisor Anantha Nageshwaran in November had showed that PLI schemes, barring mobile phones and pharma sector, are yet to pick up, and investments and job creation targets are yet to be met. To speak about the performance of the PLI schemes, we are now joined by DPIIT Secretary Anurag Jain. Mr. Jain, thank you very much for joining us. Give us a sense of when these amounts, these incentives approved yesterday for Foxconn and Paget, 415 crore worth of incentives. When are these likely to be disbursed to the companies?
No, there is no dearth of funds. This is the Ministry of Electronics which they have to disburse. And I think it should be a matter of few days that this will be in their accounts, because it's but natural, it's just a matter of few days. It doesn't take time.
Right. I would also like to ask, how many applications for incentives were received in this round under large-scale electronics manufacturing PLI? There were a number of companies in the domestic sphere, also some foreign players. What about the other applications?
For that, I think you need to understand the way PLI scheme operates. As you know that Government of India announced a PLI scheme with about budget allocation of 1.97 lakh crore over 14 sectors. So the good news is that in all 14 sectors, the applications have been approved, and more than 700 companies, 717 to be precise, have been approved for investment. The way it goes, the electronics and the pharma, they were approved in the year 2020-21. So as a result, what happened? Their investments were completed in the year 21-22, and they went into the commercial production phase, and now their incentive claims have started coming in. The schemes which are sanctioned in 21-22, there the investments are taking place in 22-23. Their incentive claims will normally come in 23-24. There are certain other sectors where the investment cycle is short, say for example food processing. So there are about 5-6 sectors where drones manufacturing, there the incentives are expected to be actually given out before March. Our expectation is that about 4,000 crore of incentives would be disbursed before March, which will be these sectors where either the investment cycle is short or the schemes which started a little early. Most of the other schemes were announced in the year 21-22. So right now we are in the midst of investment process. Once the investment is over, their commercial production will start, and thereafter the claims for investment incentives will come. So the way scheme is structured, once the application is approved, the company has to do the investment. They have to meet the minimum threshold target of the investment. Then they have to meet the minimum threshold target of the production sales. It is just not that after investment you get the money. It is after the sales you get the incentive. So therefore, it takes 2 to 3 years before the first incentive is drawn out. 1 to 2 years for investment and first year of production thereafter. And it is only the increased production. So as you would have read in the press note which the Ministry of Electronics gave yesterday, they have met both the targets of investment and the sales.
Right. So that's an important point that you're saying, sir, that 4,000 crore worth of incentives could be disbursed across 4 to 5 sectors before March 2023. Could you give us a sense of some of these sectors, sir?
Yeah, I said pharma, drone, food processing, electronics. So as I had mentioned, it is either the investment cycle is short, the putting up the machinery is just a matter of few months, like smaller machines like in food processing, etc., or the schemes which started earlier, which is pharma and electronics sector. Rest of the sectors, the investments are taking place. Till now, more than 47,000 crore of investment has taken place. Almost close to 4 lakh rupees 4 lakh crore of production has happened, and almost 4 lakh employment has been generated in 14 schemes put together.
So that's an important status that you're giving us also, sir. There has been a regular review of PLI schemes. You have been conducting those meetings with different ministries and also with the industry. Are you looking at maybe making some changes to some of the PLI schemes to make sure they attract greater investments?
Yes, these schemes have been done with a lot of consultation with the industry, and by and large, as it has shown out, that most of the schemes are fully subscribed, so it had good offtake. Since it was done in consultation with the industry, therefore the offtake was good. But there have been certain savings for various counts. New sectors which are being examined, there is a committee at the level of the Cabinet Secretary, which is called Empowered Committee of Secretaries. The reviews do take place at the level of Niti Aayog also, and regular monthly meetings do take place at our level also. So this is how things mature. When more ideas come, you look at more sectors. But as of now, those 14 sectors which have been approved, I gave you the statistics, things have started taking off, and it's a very good news that the first incentives have been drawn. The first incentive was given to Paget about 2 months back, that was 53 crore, and now 2 more incentives have been issued, because in electronics there is a special mechanism where CO Niti heads the committee. In other schemes, which we learned later, the power has been delegated in most of the schemes to the concerned line ministry.
Right. So you are saying that there could be more sectors, sir, which could be covered under PLI. Without going into what new schemes could be announced in 2023, could you give us a sense of the amount of fiscal headroom that the government has for new PLI schemes, for new sectors?
No, anything. The way we select a PLI scheme is, basically it has to be strategic importance. It has to have export orientation, means it can become a global champion. The company can become big, and because of economies of scale can become a global champion, or it can have a large employment. So these are the basic criteria on the basis of which a PLI sector is selected. More importantly, we also ensured in the design of the scheme that the support which is provided is slowly reduced. It is a tapering kind of a thing, so that by the time, typically in a particular scheme, the support would be provided for a period of about 5-6 years, typically 5 years. So at the end of 5-year period, the support would gently come down so low that the company is able to stand on its own legs in the international competition.
Right. That's an important point, sir. I'd also like to ask you about the quality aspect. Now, we have been seeing and also getting reports of how after the Maiden Pharma incident, for example, where there were questions about the quality of the cough syrups because of the deaths that had taken place in Gambia, that the government was asking the line ministries to ensure that quality is maintained. We also saw that with the PLI schemes for electric vehicles and advanced automotive components, that the focus must be on quality and safety when it comes to judging companies for PLI incentives. Is this a yardstick that is going to be implemented closely across PLI schemes now?
If you want to be a global champion, you have to concentrate on the quality. If you recall Honorable Prime Minister's word, zero defect, zero effect. There are two things which are important. One is zero defect, you are talking about the quality. Zero effect, you are talking about the sustainability. These are the watchwords for competition to move forward. Quality control orders are being issued in various sectors. Like, I would like to share with you a story on toys. 3 years back, the story goes that there was a mystery shopping done in Indian market. More than 66% of the samples failed on some count or other. Means there were substandard toys, and there was a huge import of toys into the country. The department came up with quality control orders. They were implemented. As a result, over a period of time, what has happened? Indian companies have been able to improve their quality. So from a trade deficit of about $200 million, within a matter of 3 years, it has become a trade surplus of more than $150 million. So that is a change in the equation. That has happened because of the quality. Second thing is that the second mystery shopping which was done after a gap of 3 years, the percentage of samples which passed, which met the standard, moved up to 85% from 33%, which shows that there has been a real impact on the ground of these quality control orders. So this is the move forward. It is just not that you give the money which makes the system grow. You have to address it holistically. You have to ensure the quality. You have to give the various other things like ease of doing business on which we are working. So therefore, it's the whole hand-holding of the companies which ensures that we are able to help the companies to grow to being global champions and thus increase the exports and have quality goods within the country.
Right. And my final question, sir, if I were to ask you about the mobile phone PLI scheme or the large-scale electronics PLI scheme, we saw $5.8 billion worth of exports in this sector in FY22. What could be the growth in exports from the mobile phone sector in FY23? And if we speak about the PLI schemes in general, are you working on certain projections on the kind of investments, capacity building that we could see because of the PLI schemes next calendar year and next fiscal?
The way we look at this, mobile is one of the biggest success stories. From 2021, that's FY21 to FY22, the exports grew almost double. And from FY22 to FY23 till now, that is up to the month of November for which the data is out, the growth has been doubled once again in these 8 months. So typically if you look at it, from FY21 to FY23, we are almost coming close to 4 times. If this speed is sustained, we may maybe close to 4 times or maybe a little less than that. That is how it is moving up. It is a real revolutionary story, success of PLI. So if you look at all 14 sectors put together, it is expected that there will be an investment of about 2.75 lakh crore rupees in these 14 sectors by 717 companies for whom the application has been approved. And over a period of the cycle, which is 5 to 6 years, right now I'll have only those figures, but if you want for the particular fiscal years, we can work it out because all these companies have given their year-by-year program. A particular sector, say MNRE sector, there the companies will actually start production a little later. Their applications have been approved now, so it is 22-23 and 23-24 will be their investment cycle. 24-25 is what they will start claiming the incentives. So their production and the incentives will go for 5 years. So typically these schemes are for 5 years. Okay. So depending on when they have started, all these have started in the last 2-3 years. So the end cycle is also that way separated out by 2 to 3 years. In certain, because of the peculiarity of the sector, they have given an incentive over a period of 7 years. So it all depends on the way you have calculated the disability in the sector and the way we look at it. Like in most of the schemes which have been designed, a part of the disability has been met through these incentives and remaining part is through efficiency which companies are making up.
Okay, Mr. Jain, thank you very much for joining us on the performance of the PLI schemes. Let's shift focus to the auto sector now. The auto component manufacturing industry saw a growth of nearly 35% in the first half of FY23. According to a report by industry body ACMA, the components export grew by 8.6% in the first half, while imports grew by 17.2%. Meanwhile, component sales to OEMs grew by 46%. We're joined by Sanjay Kapoor, president of ACMA. How do you expect to close FY23 in terms of growth and volumes, Sanjay?
Parikshit, thanks. We look at the industry as very positive. We've had a robust growth. We've had good growth, in fact. I'd say from even coming back from last year, where we had high growth last year as well. And we're pretty hopeful that growth will continue. We've seen good growth in the domestic market specifically, which is very encouraging. Commercial vehicles as well as passenger vehicles have grown. The two-wheeler industry seems to be coming back. We had a very positive festive season and we hope this continues. So we're really looking at a positive outlook as far as the auto component industry is concerned.
Okay, just to ask you about increase in imports from China, we're looking at the quantum of exports and the quantum of imports. It's almost the same in this fiscal so far. What have been the reasons for this, and has there been an increase in import from China this year?
Yeah, so you're right. China, the import has been marginally more. It's gone from 24 or 26% to 30%, so maybe a 4% increase from that in that aspect. However, if you look at the industry traditionally, we've been a net importer. Last year, of course, we were a net exporter, and we had a trade surplus of $700 million. This at this point in time, we're even. I'd say even that is a positive. As and when more localization programs come into effect, we will see this number drop, and we'll see less dependence on imports, and the export number go up. So we're pretty hopeful that we will continue to localize. We have programs that are very well defined between SIAM and ACMA, where we're working on localization programs. We've got to the tune of close to 20,000 crores laid out in terms of the kind of localization we want to do. And once this comes into effect, we will definitely see a drop in imports.
All right. I'd also like to ask you about the COVID surge in China. How worried and concerned are you? What are the reports that you're getting on China as to how the COVID surge there could impact manufacturing?
Yeah, I think it's early days, Parikshit, at this point in time. What I'm reading is it's very similar to the Omicron, which is a mild variant, and I hope it's maybe even a milder variant. Yes, we need to be careful. I think we need to mask up. And we are well prepared as an industry to tackle situations like this. We've been through the worst, I feel, in April last year, where we saw the second wave, where there was a lot of scare at that point in time. However, I'm hoping that this is a milder wave. But yeah, we do need to to be cognizant of the fact that it is spreading again. But it's yet early days at this point in time, and I hope that the world has learned from COVID how to manage COVID so that business continues as usual.
Right. My final question on FTAs, Mr. Kapoor. What are you asking the government on FTAs? There are negotiations going on with EU, UK, Canada right now. Your Australia FTA has been concluded. What has been your request to government?
So I think we want to have free trade. We are globally competitive, and we want to continue to be globally competitive. And we want to import as well as export. And I don't see any. I only see benefits from free trade agreements. In fact, you're right with regard to Australia. Our import is only $15 million. In fact, Australia really doesn't have an auto component or an automotive industry any longer. So we continue to export there. So it's not really a threat. But with the other markets as well, we hope that we can continue trade and grow trade, because we are as we grow the industry and as we become globally competitive, we want to be able to trade with the rest of the world.
All right, Mr. Kapoor, thank you very much for joining us here on News Center, giving us your view on the performance of the auto components industry in this fiscal so far, and what could be some of the possible headwinds for the sector next year. That's all we have time for on News Center. Goodbye, and thanks for watching.